Good morning, everybody. Hey, I'm glad you're able to join us today for Friday. Man, it's hard to believe. The first full week of August is now behind us. As we finish up today, it's been a roller coaster of a week. And so I thank you for joining us. I'm sure Dave will bring some insight as we look at where we're at. But before we do, I want to thank you again for joining us. If you like what we're doing, please like this and share it with your friends and neighbors. And like our page on Facebook at Statler Financial Services. Really would appreciate it. Hey, back to the other subject. We need to look at where we're at in terms of retirement planning. Folks, listen, retirement is a one and done deal. You don't get any do-overs when it comes to retirement. And that's why we put together our financial strategies for retirement strategies that you need. All you have to do is text the word retirement to 863-285-3815. Do it right now. It's well worth your time and energy. Dave will be with us in just a few moments.
105.7 Light FM, that's kind of what we're singing to the stock market. Get up, get up, get up, get up. Ow! Darn, it's not listening this morning. Let's see what went on with your money yesterday and what's likely to happen to it today. Your IRA and your 401k get affected greatly by the junk we talk about here every morning. Downtown Sebring, we head to the expert offices of Statler Financial Services, where Phillip Statler's standing by. Phillip, good morning. How are you?
Hey, I'm doing well today, Dave. It's welcome to the roller coaster ride.
Oh, yeah, like we were saying before we went on the air, we're kind of into that phase right now where you go up one day, it's almost a guarantee you're going to go down, even though nothing really changed. Yesterday was a good day on the market. Dow was up 371, NASDAQ up 176, S&P up 54. Boy, happy days are here again. And now we get to Friday, right?
Exactly. You know, it's definitely not going to be an up day unless something changes drastically in the next 30 to 45 minutes.
Yeah, the opening doesn't look very pleasant. Start the day out with government data dump information. We started out with the producer price index, producer inflation, up just a tinge, but still 1.7% annualized for the overall rate, about what folks expected. But the core actually fell, and that's when you get rid of stuff like energy, food, stuff like that, you know, the little options in life that any business can get along without, right? Yeah, like energy and food. It dropped, which was kind of a surprise to everybody concerned, wasn't it?
Well, it was because the core PPI was expected to be basically in line with the regular PPI, up 0.2%. And what we saw was the core actually dropped 0.1%. So that's 0.3% swing from what was expected. And I got to think that basically they're saying we're at no inflation again, you know, basically. And so I'm sure the Fed's not happy with that.
Yeah, and when any number in an inflation figure, whether it's producer, consumer, core, or otherwise, when it goes negative, somebody out there in the investment world starts using a four-letter word, deflation. And it's only in finance that deflation is a four-letter word, right?
Exactly. So, you know, it's one of those things that as we continue to kind of wonder, you know, where's this economy going? You know, I think we're kind of getting some slowdown in different areas, and the question is going to be, at what point does that business cycle switch from growth to contraction?
Understood, and something we've been saying all along: the recession is a recession somewhere down the line is inevitable because the business cycle has never been repealed. We just hope that a recession is always a soft landing. I mean, it's better when it's a plateau than it is when it's a dip, and that's obviously what we're hoping for. Not good news on the retail front. This came out officially after we spoke yesterday. Sears and Kmart announced another spate of store closings, and one of the unofficial lists that Barry got a hold of, it included our local Sears store, which is one of those bad news national stories that kind of hits close to home, doesn't it?
It does, you know, and I think people had to wonder when it was going to happen, right? I mean, it's Sears has just been limping along now for quite a while, and you know, we lost to Kmart last year, so I think that it was expected that eventually we would lose our Sears also.
And when the CEO ended up doing that buyout that we covered so incessantly last year, it was painfully obvious that the quote unquote new restructured Sears was going to be a much smaller Sears than the one that it replaces. And unfortunately, small city stores like ours are kind of part of the fallout. And I won't say we were lucky, but every time those store closings came out before they went into bankruptcy, all of us were poring over the numbers, and some stores that I honestly didn't expect to be on the list did, and ours survived probably longer than I think some folks expected.
I agree, and I think probably a lot of that was because Sears actually came in later after the mall had opened and built their own building there. So I think that probably had something to do with it over the time that they had invested into it. That they tried to hold on to it as long as they could, but at this point, red ink, you just can't afford to have any more red ink.
Absolutely. As a shopper at the mall, our local Sears has always looked, at least relative to the Sears chain, relatively well supported, but it was one of those things where the corporation is on life support. Even stores that aren't doing all that terribly badly, end up on the chopping block whether we like it or not, and we'll issue our condolences and our sympathies for the employees that are losing their jobs in the process. It's not good news no matter what happens.
No, it's not. And talking about Sears, let's talk about their competitor, J.C. Penney's.
I was going to say, you got some national news on them.
We did. They got a letter from the New York Stock Exchange telling them that they're in violation of their listing agreement, which basically says that their stock has to average $1 a share for 30 days at the closing price. And it hasn't done that. It's like 67 cents a share right now. And so they have 6 months to get their share price back up over $1 a share, and it's got to stay there.
This kind of just underscores the overall travails of brick and mortar retail. It gets to be more a challenge with every passing year, doesn't it?
It does. It really does.
So as we blow merry sunshine all over the place, we might as well go to the reports as earnings season continues. Do you have any good news from the traded stocks on their quarterly reports?
We do have some good news, but we're going to start with bad news first, Dave, because we talked about Lyft yesterday. Lyft came out, and they actually did much better than expected in terms of their loss was less than half of what was expected. Uber.
Yeah, at the time, I kind of said, I wonder what's going to happen to Uber, and you've got that answer, don't you?
I do. Uber, on the other hand, not so fortunate. They lost about $1.60 more than what was expected. They lost $4.72 a share, which was a lot bigger than expected. Revenue also came in below forecast, and so their business has slowed down overall. And so they're trading down this morning, getting close to 9%. They're down 8.77% right now.
That's got to hurt. Did they give any reason why they were having so many challenges and Lyft suddenly is growing? Is it just kind of a zero-sum thing, Lyft taking their business?
It was, I saw somewhere, not in this report, but in a different report, I saw that Uber has, I guess, more competition on the European front than Lyft. I don't know if Lyft isn't in as many places right now, but they say the European competition is giving them a little bit of trouble.
Okay. When you mentioned the last quarterly report from Uber right after the public offering of Lyft, I think, I know that you told me that a lot of those rideshare companies are doing really well with things like food delivery and the like, and that prompted me to ask a few of my restaurant friends in town, and yeah, it's even being used around here that much, so I figured we might be in a growth industry.
Well, I think it is. I think they're just dealing with some, I think they're just slowing. Competition is becoming more and more, and when you have more competition, you have to become more innovative and be more out there marketing and getting new clients in there. And so I know I use both Uber and Lyft when I travel, and Lyft is always sending me a $5 coupon. Hey, next time you're out of town, here's a $5 coupon. Use Lyft. Yeah.
Good marketing for the frequent users. I agree.
Right.
Well, there's double digits down on Uber. You got any other big losers before we can get to good news?
Well, we do have some. Well, I'm trying to think if we have any more bad news. I don't think there's really anything else that's really bad today.
Good.
Everything else is pretty much up. Doesn't mean their stock price is up, but they did well in terms of the quarter. We have CBS reported. They came in at $1.16 a share. That was 4 cents above estimates. Their revenue was above forecast. Let's face it, they have the NCAA finals and the basketball tournament, and so they had strong ad sales through that, and so they're up about three and a third percent this morning before we get opened up today.
Media geek like to hear that.
Yeah, I bet. And then, hey, a couple popular ones: Activision Blizzard, the gaming company. They came in 12 cents ahead of estimates. They beat on revenue. Their Call of Duty franchise continues to pick up some momentum, but they are trading down this morning, 1.3%. Not sure exactly why. I didn't see anything glaring in the report today, but because they raised their full year forecast too. So sometimes you just never know. Profit taking probably.
Mm-hmm. Other indicator.
Dropbox, popular Dropbox. You pretty much get a free subscription to that for a minimum amount of use. But it comes on, I think, every iPad and every iPhone now. They beat by about 2 cents a share. Revenue beat also. I thought this is interesting. They've seen an increase of 14% compared to last year of paying customers. And so that's got to be some good news. But it must not be as much as what people wanted because they're down about 1%.
Ooh, that's always struck me as an interesting business plan. It comes free with Windows too, and they don't pay a lot of attention to how much you're storing until all of a sudden you're over your capacity, and they say, "Whoopsie, you better pay or you're going to lose it." That's really a pretty good deal. Hold it for ransom then.
That's right. Hey, one you and I talk about quite a bit, Yelp. They've struggled for a long time, but they have had a decent quarter. They beat by about 4 cents a share. Their revenue was basically in line with what was expected. They have made some changes in their operations, which is allowing them to kind of increase their sales. They've without having to increase their sales force, which is usually a good thing. And they're trading up, getting close to up 7% this morning.
We'll take some good news. Got to reset the table here for yesterday. One of those days, kind of the opposite of what we had the other day. Every single Dow component was up by at least a little yesterday. It was up 371 points. NASDAQ up 176, and the S&P up 54. Everybody almost 1.5%, and the NASDAQ actually went up 2.25. An undoubted good day yesterday. 45 minutes before we open, we kind of alluded to it, Phillip. How bad is the red ink looking this morning?
Well, it's we're going to give back some of what we got yesterday. The Dow is down 0.5% to 26,228. The S&P 500 is down 0.6% to 2921. And then we got the NASDAQ down 0.8%. That's down $61.50. Gold and silver both trading up basically even. They're not, you can't even say it's up. It's flat. And then we got crude oil up 1.2% to $53.21 a barrel.
And that's pretty flat from yesterday, but boy, it gyrated through the day, didn't it?
Yeah, it really did. And then we got U.S. Treasuries, the 10-year Treasuries at 1.7 right now.
Yeah, and that's almost flat from yesterday, but it sure isn't going up by much, that's for sure. World markets mixed in Asia, mixed in Europe halfway through their trading day as well. Phillip, advice is always needed, and when things are upsy-downsy the way they are lately, it gets even more important. How do I make contact with you to stabilize my retirement?
Hey, give us a call at 382-0037 to get our financial x-ray analysis of your current portfolio. It measures the risk you have and the cost you're paying to make sure both those things line up with your expectations. And then get our retirement strategies paper. All you have to do is text retirement to 863-285-3815 to get that free report. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays and 10 a.m. Sunday mornings on News Talk 730 a.m.
All righty. And again, Monday right here on Light FM. Phillip, thank you so much. You have a great weekend.
All right, man. You too. Have a great one.
Take care, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Have you done?
Hey, as we close out to the week, I want to thank you for joining us this whole week. Again, if you like what we're doing, please like and share this video with your friends and neighbors. Really would appreciate it. And if you please get this free report. It's very informative. Retirement strategies, text the word retirement to 863-285-3815 or click the link right here in this Facebook post. Hey, have a great weekend. I look forward to speaking to you again on Monday.